I'm Leandra Lederman, the William W. Oliver Professor of Tax Law at the Indiana University Maurer School of Law. And we're really pleased to have with us today Goldburn Maynard. Goldburn Maynard Jr. is an assistant professor of business law and ethics at the Indiana University-Kelley School of Business, where he teaches classes in business ethics. He previously served as an associate professor of law at the University of Louisville Brandeis School of Law. He's a graduate of the University of Chicago Law School and also received an LM in taxation from Northwestern University School of Law. His research focuses on issues of wealth distribution and inequality, tax policy, and America's aging population. He was previously a visiting assistant professor at Florida State University College of Law and Washington University School of Law. He's also worked for the Internal Revenue Service and as a tax associate at Skadden Arps, Slate Meagher and Flom. And I think that we actually met when you gave a talk at the University of Chicago in 2014 or 2015. Anyway, it's terrific to have you here with us today, Goldburn. So with that, let me turn it over to you.
Thank you so much for having me. So the dog's playing in the background just make it impossible for me to take myself too seriously today, which I think is a good thing. Let me share my screen real quick. Okay, and so I have a 3-screen setup here. So if I'm looking away, it's because I'm just looking at another screen. All right. So I first wanted to thank Professors Lederman and Gamage for having me. It is a pleasure to be amongst the distinguished group of scholars who have presented at the colloquium. It's also a luxury to be able to have this much time to present. So I'll probably be able to talk at a normal pace as opposed to kind of the Gilmore Girls pace of talk that I usually do. I think it's really funny that Leandra mentioned that time that she met me, because I think she met me when I probably gave my worst presentation ever. So I think we can only go up from there. I was also joking to myself this morning that the students probably know more about my paper than I do at this point, because I've been so busy working on an essay on the March stimulus package. So I've been so focused in on that right, I totally forgot about this paper, but it's so fun to be able to revisit it. And so this paper was a part of a symposium from the Ohio State Business Law Journal. And so the actual program was held in March, and the symposium was entitled Confronting Crisis, Preparing for the Unexpected. And so in thinking about confronting crisis, and they asked me to give a tax angle, of course, I thought about the restaurant crisis. So of course, as a part of the pandemic, one of the hardest hit industries has been the restaurant industry. Right, some have been able to somewhat make along with some delivery and the like, but still the losses have been substantial. And so there was a push from then President Trump when he met with restaurant executives in May, and he brought up the idea of restoring the deduction for business meals to its previous state of 100% unprompted. And he also suggested that it was more important than the other things that the restaurant industry was actually asking for. He said, I think it's frankly more important than even the other things we're talking about, right? And so what did the restaurant industry want? So they wanted help with getting the insurance companies to pay out on these business interruption insurance claims. And so the insurance companies, of course, were giving them a hard time. We've all probably filed insurance claims and know what that's like. And so they wanted some assistance from the federal government with that. What they also wanted, right? Actual cash. Give us a cash infusion. Look, you helped out the airline industry, help us out as well. What did they actually get? The the deduction for business meals being restored to its previous 100%. And so, right, my question and lots of tax policy uh, folks' question was, but why? Why did this need to happen? Why now? Why ever? Why did we need this? Who asked for this? And so, right, there's a part of this, of course, a big part of the story that is about lobbying. But right, I didn't want to go there. So I largely have just elided the questions of lobbying. Of course, we know that that's there, of course. Instead, I wanted to focus on, right, that there's something else going on here. And so basically, I drew on this simple proposition that I've drawn on before, and that is that in politics, the stories matter just as much as the facts. So despite us as academics always liking to pretend that, yes, you just give people more data and more facts and they'll be convinced, we know from research that that is not true, actually. And so this very much draws on work by Jerome Bruner, which in which he laid out that there are these two modes of the mind. So the paradigmatic mode is the more logical or scientific part of the brain, right? And there's also this other part that we may also be familiar with, which is the narrative mode. And so that one, like stories and drama and myths, etc. And so, right, his work and that of others, of course, also leads to this idea that the story is just as important as the facts. And so the thesis here is that the passage of the deduction is an example of dogmatic, ideology driven policymaking that relies on the human need for stories to make sense of the world. And so this is a triumph of story over facts and data. Okay, so just a short history of the business meals deduction and where we stand right now. And so, right, for decades, there was 100% deductibility. And so part of the argument, a valid one, was that, look, of course, some business happens over meals. And so many deals happen during meals or other forms of entertainment. So therefore, right, this is a proper, necessary uh, business expense. And so, of course, there were questions about this, right? The tax policy people always had questions about this because there are difficulties with a kind of mixed personal business deduction like this, in the sense that, one, there's kind of this valuation issue where the amount of business deduction that you should get really varies by the individual and how much you personally enjoy business lunches, etc. And of course, you can't administer a tax system based on a rule that varies by individuals that way. It's also really ripe for abuse in that you can transform personal consumption into a business expense. And so we had, right, we had several administrations work at this. We had the Kennedy administration make some proposals, they didn't pass. The Carter administration made some proposals, they didn't pass. But finally, with the 1986 Act, something was done. And so the deduction went from 100% down to 80%. And then again, during the Clinton administration, they wanted to uh, do some budget tightening. And so one of the things they found and they used was the deduction for business meals. And so it came down from 80% to 50% in 1993. And there it stood for a while, right? For over 2 decades, actually. And in comes the Tax Cuts and Jobs Act of 2017. And so here we finally say, well, look, we're going to cut off entertainment expenses altogether. We're so skeptical of, the highly consumptive character being at the basketball game at the box, that we're just going to get rid of those altogether. However, we're still going to keep business meals around. So if you are at that basketball game in the box, no, you can't write off the ticket. But if you have a meal in the box and you have that billed separately, you can get a 50% deduction on that still. So the deduction for business meals goes on at the 50% rate. And some still argue, that it should have gone away altogether, but there's still some argument, that there's at least some business character here. And so at least 50% is some kind of compromise. So in comes the 2020 stimulus bill, and the 100% deduction for business meals is back. And so the rationale is that this will help the restaurant industry in that it will encourage those business executives which were not otherwise having business lunches and business meals to go out and do so. And so what were some of the responses, which is what made this particularly interesting, of course. And so on the left, and of course, I'm oversimplifying here, but on the left, we have Matthew Gardner, who is a senior fellow at the Institute of Taxation and Economic Policy, and he called it ludicrously ill-fitting policy for the moment. On the right, we have Kyle Pomerlow, a fellow at the Conservative American Enterprise Institute, and he argued that it was both poor tax policy and poorly targeted COVID-19 relief. And so where do scholars generally stand on this? Problems, right? There are problems with this 100% deduction snapping back, in the sense that we're just bringing back a lot of problems that were there before, right? Which I discussed already, the personal element. But in addition to that, now, you brought back kind of this indirect perverse subsidy that tends to favor high-end restaurants, when what you were trying to do was actually stimulate the economy. And so, there's some advantages to doing this, but this is poorly targeted policy in that it's largely gonna help some high-end restaurants. And also, what's keeping business executives from having business meals is not the deduction, but rather the pandemic, right? And so it just didn't fit as a stimulus or any kind of substantial recovery. And so this was still, despite kind of these reactions from scholars and other policy experts and the like, still very much a priority. So much so that when Mnuchin was having those last minute negotiations with the Democrats, this was very much one of the priority items that he haggled for. So they cared about this. And so, that bothers me in some sense, because tax policy experts said this is a no-go on the left and the right. And so I argue that this partly has to do with the American approach to stimulus and social policy. That is that the narrative tail wags the effective policy dog. And so, for example, in other countries, you have a more generous safety net, and they went about their stimulus with direct and more generous wage support. Where on the other hand, we do things like loans and unemployment. And so to my mind, I say, well, consider the ways in which we make things worse by not being honest about things and by always having to stick to some storyline. And so in this paper, I argue basically that conservatives have boxed themselves in on any kind of government action, in that they push some narratives for so long that it's hard to now back out of them. And so, right, socialism is horrible, and anything that looks like socialism is bad. Government spending is bad. And any kind of bailouts look like socialism. They're not great. You shouldn't be bailing out people. But what's great? Tax cuts are great. Tax cuts are wonderful. However, what do you do in a crisis when government help is needed and you have the Grover Norquist of the world looking over your shoulder to make sure that you do not just add to the deficit and enact things other than tax cuts? And so very much when you're in crisis, like the COVID-19 pandemic, government action is necessary. And Republicans were in power in 2020. And so the question is what to do. And so I say, well, in comes the tax expenditure or the tax benefit. And so in one sense, they function like government spending, right? So more money ends up in certain people's pockets. But on the other hand, they're accounted for as lower taxes. So it's a nice way of being able to have things both ways. They perform some kind of magic trick of increasing the government's influence over society while also reducing tax revenues. And so once you're in a world where, right, you are kind of led by narrative, right, it really doesn't matter, right, the consistency or the effectiveness of the policy as long as the rhetoric is correct. And so, right, I think that we've gotten to a point now where we have a certain part of the Republican Party that is just kind of drunk on tax cuts, right? They can solve lots of problems, even problems that are way too big for any kind of tax cuts. And so this is from Bruce Bartlett, right? So the party support for tax cuts is faith-based and donor-based, which increasingly amounts to the same thing in American politics, and not subject to revision by empirical data any more than the core doctrines of a religion are. Most people can be persuaded by logic and evidence on issues they aren't emotionally attached to, but only the truly committed are willing to die to defend an issue on which there is no evidence at all, just faith or wishful thinking. And so I feel that what we end up with ultimately is that we end up with very limited policy discussions because the narrative always has to be just right. So even if just giving money to low-income people is the most effective way to lift them out of poverty, we can't really do that. And we have to find lots of conditions and other ways to somehow say that we're not giving them a handout. And so I'll just conclude by saying a couple things, right? So my wish, of course, is, of course, I ultimately I'm an academic, so I want us to move away from these kind of solutions that are not at all supported by data. However, I'm not offering some kind of fix to get us there, because I think that this is more pervasive, chronic, and a part of kind of the nation's dialogue than we tend to assume it is. So I'm not gonna give you some nice proposal here that is gonna fix all of this. And so I think that it's actually underestimated how much people hold on to these kinds of ideas. And so there's this, there's been research on this. And so there's this idea of certain things called protected values. And so kind of traditional research says that if, for example, you give somebody some monetary incentive, that they'll even lie about the thing to get the incentive. But if it's on someone's protected value, right, the money won't matter. And so people don't accept trade-offs on these dimensions like life, health, religion, and I'm partly arguing tax cuts. I also think that it's underestimated, and I think this is partly some scholarly bias as well, in that you get a lot of economists who, well, when you ask them like, well, so when do you think that we're gonna get to a VAT or something that makes more sense? And they'll say, well, the crises, right, will get to such a place that eventually the government will have no choice, right? A Medicare or something will happen, and we'll just have to get to something, some more efficient tax collecting devices. And that's not actually true, in that research has found that, for example, people who are literally dying will say no to Obamacare because they don't want to be on Obamacare, because they view it as some form of redistribution that is going to immigrants and Black people, et cetera, and they want no part of it. And so I think we kind of have to back off of this idea that, well, if we just give them better studies, or if we just come up with a more complicated, optimal tax kind of way to sell something, that they'll be more liable to buy it. I don't necessarily believe that. And so I think that ultimately, right, you get, as I said, boxed in or cornered in on all sides increasingly, because more and more things are taken off the table solely by narrative. And so you end up having some unintended consequences. And I'm using the VAT as an example. I'm not saying that the VAT is a cure-all either, right? But you can't get to something like a VAT in this country, because on the right, that would pick up too much taxes and make government too big. And on the left, it's a consumption tax. So you can't even talk about the ways you can remedy that at all, because just plainly is a consumption tax, and that narrative that all consumption taxes are bad just shut down all of the discussion altogether. And so I worry ultimately about these unintended consequences, and I hope that we're able to find a way out, right? I suggest things like countering with narratives that are more closely moored to facts and data. But some of this is just worrying in the sense that, to the extent that, for example, you just politicize something, everything else in terms of data, et cetera, goes out of the window. So a lot of this is a lot more powerful than we've necessarily been admitting to ourselves. Okay, so with that, thank you so much. I look forward to your questions and your comments in the Q&A.